US CPI data came out in the United States, and that CPI data really gave the market a lot of direction for the week. Now, we saw as soon as that was released, what did the NASDAQ do? It surged along with all equity markets, and it really put to ease people's fears that inflation was going to remain elevated. But it's just the first time in almost 20 months that we're seeing inflation go in the other direction. So in my opinion, I think that our markets might have overreacted maybe to the positive side. So what we had was CPI easing to 8.5%, down from 8.7%. I'll show you a quick chart here. This is showing the month-on-month changes in CPI, seasonally adjusted over the last 12 months. So as you can see, the most recent reading was at 0, which is the lowest we can see on this chart, indicating that inflation is going in the other direction. However, I want you to give you maybe a longer-term time frame. If you look at the next chart here, you can see, we're still very elevated, the highs we've been over the last 40 years. So the Federal Reserve definitely has a lot of work to do. Now, just quickly to finish up, because I've been going on about inflation in interest rates all year.
Forever.
But, we were going on about it before it was in the media and the news and as important it is. And I think it's still relevant today. But I just want to take you back to the period in the 1970s and 1980s. For a good 15 to 20-year period, the stars align and all the indicators align. They were raising interest rates and inflation was going up for 15 to 20 years. So that's why I'm saying, yes, inflation has eased off, but is 1 month lower really an indication that inflation's done for and the market's good to go again? In my opinion, I don't think so.
Well, it's all about that perspective, really, isn't it? The whole idea that, yes, interest rates are going up, but are they really going up? Is it still going to be worth putting money into the bank as opposed to the stock market or bonds or anything else?
And it could be the peak, but again, you need a lot more than 1 month to tell.
Very good. Let's go over to Dr. Adam Shedakowski, because there was another announcement that came out this week over in the US, and that was PPI data as well, yes?
Exactly, yes. And that was also somehow a reading that was positively accepted by the market, also a better than expected reading. So basically what happens there, just to remind the viewers, PPI is the producer price index, so that is at the level of production. Then there is wholesale, and then finally goes to the retail, what is the CPI. So that is somehow, in some sense, you can think of it as a more of an early indicator of what could be happening. So we are talking about a PPI index that is that retracted from an 11.3 now to significantly below 11.3, so 9. So let's actually have a look at the chart of the trend, so we can see it has been, so this is quite a few years back, so it has been quite a significant uptrend, and now is maybe a reversal there. We actually have to actually look at a couple of last month where we're seeing a little bit of a pullback there. Also, another interesting thing I want to show you is the month-on-month change. So this is the PPI changes month-on-month, and you can see here, this is the first time we have a negative reading for about 2 years. So so that's pretty important, I would say, and somehow indicated that we could be seeing some changes. Why does that happen? Well, one of the biggest reasons was actually gasoline prices dropping a little bit. So actually, it is a drop of 16% in gasoline prices. So that was good to see. That pulled the indices lower. So it's another indicator, and the market was certainly also very happy about that.
Very good. And so we got positive announcement more or less in CPI, PPI as well, sort of both positive. Dan, is this going to change anything about the future projections of Fed rate hikes, do you think?
Yeah, so I think after a lot of these announcements, it's really important and interesting to have a read at what a lot of the major institutions are saying, right? Obviously, we don't know how much of the market they control. And as both of these gentlemen pointed out, for some very positive readings this week. Now, across the board, like Louis said, it might not be an indication that things are really changing. But again, some of the first signs of positivity in quite a while. So that is obviously a good thing. But I guess looking across the board at seeing what the institutions are saying, I guess Morgan Stanley have been a little bit hesitant on, providing a bit more of a positive outlook. As Lou mentioned, I think he hit the nail on the head that markets may have overreacted a little bit in the positive sense. So I read a report today from Morgan Stanley. Some of their economists were talking about the outlook, not just for equities and bonds, but also corporate earnings as well, and the impact that may have because obviously we're going through earnings season right now, a big talking point over in the US and here as well. We've seen a lot of people report here over the last week. It's been a very interesting time, but I guess, as I said, they've sort of warned that I guess the market may have overreacted. We're going to see some positive valuations come out for bonds and equities, but not necessarily the same for corporate profits moving forward. So I guess the impact will be if inflation does come down, it's all about timing of how this occurs and through what sectors of inflation as to how that may impact corporate earnings. And I guess there's an interesting thing to look at here as a reflection on the pandemic. So Mr. Wilson, who is a economist at Morgan Stanley, talked about through the pandemic. He said end prices increased faster than costs because labour and other expenses were slower to rise, and this was largely due to excess demand created by the enormous amount of fiscal stimulus injected into the economy. Now, this, I guess, supported the point that they were making in this article, where they wrote that current US inflation has been caused by a demand pull, where prices lift following a shortage of supply, rather than a cost push, where increases of cost of wages and raw materials boost overall prices. So I think that could have an impact, as I said, from the timing of how this inflation really does settle, if it does, like Louis said. But I think, as he said, I think some investors quite positive on the market. I think a lot of money being poured into tech this week. As Louis said, the NASDAQ had a very positive pump, record numbers of money being pushed into tech. But I think, I think it's very easy to get swept up in the positivity. So maybe, I guess, being a little bit cautious with regards to the overall impact on the economy moving forward.